Folks, welcome to the Midweek Roundtable. We have our usual co-hosts, Jeff Zananeri from Joy of the Trade, and myself. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's actually the 10th of November. I have no idea where this year has gone. Don't ask me. It's just like that, just going by so fast. And folks, before I forget, you may want to take a piece of paper, take some notes while Jeff and I are speaking. There's some good information here. And if you want to reach out to Jeff, feel free to do so. He's not going to bite. It's jeff@joyofthetrade.com, jeff@joyofthetrade.com. And my email is support@MarketGeeks. I've used it for years. It'll go directly to me. Jeff, how are you doing today?
Great. How are you, Roger?
I'm doing pretty good. It's a hump day already. Did you see the CPI number today?
Definitely. Wild. Big shock, right? Not really.
Well, not
These
really,
guys
no.
completely lost the plot. They're letting inflation go bananas, and 6.2% year over year. And that's conservative. That's like really more like double digits if they're being honest about it, which they're not. And the pain train is for everybody. This hurts. Yeah. This hurts normal Americans. The Fed has made a conscientious decision to keep asset prices inflated vis-a-vis bonds and stocks, and to pass that pain out to every single human being that buys anything priced in fiat currency.
And I agree with you. I want to ask you an interesting question. We've seen some sell-offs recently in some commodity, and this is actually a tough question, and it's not a loaded question because I don't have an answer for this myself. So I just kind of wanted to throw this out there. Commodity prices, as you know, maybe around the beginning of summer, towards the middle of summer, they really spiked, but some of them seem to be coming off quite a bit right now. Especially
not gas, not oil.
Not oil.
Those are still at year highs.
Right. But certain like lumber and some metals, and we're seeing really strong inflation. How do you reconcile those? I'm just curious.
Well, you got to look at how parabolic the moves were. So when people get like super long on a 400% move, it creates this vicious cycle of people having to unload that. I actually think that that's healthy for another move back up. It's more of like a condition of market positioning than of actual like fundamental economic change. Look across the board today, man. They just put the CPI out. You can look underneath the hood. You had 50% energy prices year over year. You had 20% housing prices year over year. You had 15% food prices year over year. So across the board, we're seeing inflation. It's there. It's real.
Oh, it's there.
Wood went up 400%. Lumber went up 400%. And, people got overly levered on one side. And then the bottleneck in logistics, the bottleneck in having, in workers, finding workers to do jobs. My brother's a construction manager, big project manager for like tens of millions of dollar projects. And he's like, what happens is you can't procure the materials. You just have to say no to business. So it becomes a vicious cycle also of, business slowing down because of the byproduct of prices exploding. All of it leads to an economy that is suffering what I believe to be early kind of like heart attack symptoms. And so, activity is the blood of the economy, just like blood, moves oxygen around your body and allows your organs to function. And right now we have so many places where the economy is not functioning directly as a result of inflation. And so their goal is to get the job market more buoyant. But I think that they're actually working against the job market by letting inflation run rampant.
Yeah. I think it's something that they should have started controlling quite a bit. It was a good idea. It was a good idea, and it was done out of necessity. But I mean,
that was 2 years ago. That was almost 2 years ago.
Exactly. I mean, yes, you and I have been talking about bearish airlines and cruise ships for about 2 years now.
Yeah, but you know what? Listen, Roger. Like the Fed in 2008, that like in these crisis situations when like you go into the bank and you're like, am I gonna have my money in the bank? Yes, buy everything there. But these guys are buying bonds when you can't find a house. Like there's no inventory.
Right.
Like, money is just splashing everywhere. I get like 15 phone calls a day of people telling me, I'll give you money. Let's give you money. Were you selling your house? Do you want to take some equity out? Do you want to, like there's so much money that you get all these calls. People trying to solicit you to borrow, to lever, to get more money. And why are they buying bonds? Why are they flooding the system with cash when there's nothing to do with a lot of this cash as it is.
Yeah. Yeah, it's way too much too fast, and again, it
At
brings
highs
in
too. At highs.
Yeah. So your answer, your explanation, or your rationale for the commodity prices going down, you think the estimates were just too damn strong to begin with, and they are just now balancing out.
I think in the cases where you're seeing weakness, it's because they moved so parabolically. I don't think oil moved super parabolically.
No,
30 or 40%. I think in the case of lumber, it did a four bagger.
And that's actually one of the ones. That's actually one of the ones I'm specifically talking about. Lumber was one of the ones. Yeah, it seems like. But I guess what you're saying is very similar to kind of what's happening to several stocks during the COVID, like Peloton and Zoom. They were they were way overestimated, and now they can't compete with those estimates. And Zoom is doing great. Everybody and their mother is using Zoom, but they can't. That carrot got too big.
It's more of a function of like too much appreciation too fast. The velocity of the move, people getting in way too late, that creates a vicious cycle on the downside.
So, and there's a lesson here for those people listening. And, this is the reason I'm asking you this is because it's been a question a lot of my guys have been asking me. So I figured that you and I talking about it live.
I'll break it down in crypto too, Roger, like Dogecoin. I don't know if you know, like if you follow like the separate crypto. So Dogecoin had a much more parabolic move than Bitcoin. And Dogecoin can't get the same buoyancy now on this new leg higher. Ethereum, Bitcoin, they're all making new highs. But Doge in particular had such a parabolic move of stupid money that came in, another like 5x move in a matter of a couple of weeks, that it's just been like stuck in the mud. And it's nothing to really, it's nothing against Doge. I don't know anything to make that decision. But what I would say is that it's a victim of its own success in such a short-term parabolic move, because what happens is the people that buy into that move and all of a sudden find themselves underwater, like 15 minutes later, never to see a profit again, are constantly selling every time there's a little bit of an uptick in that asset, just to take some off, get out of this miserable trade.
Gotcha. So I guess the moral of the story, or the lesson here, is don't just look at whether something is selling off. Look at what it did before the sell off, and if something went up 400% and it lost 100%, it's still up 300%. And this is actually
time to clear out that whole inventory of customers of people that have bad entry prices.
It's a good point, and we've seen something very, very similar in the Russell 2000. Remember the rally beginning of the year? It went crazy, and then it didn't do anything. But when you looked at the year-to-date performance, it still outperformed the S&P by a factor of 50% because of that rally. So it's a very good point. Let's narrow the focus just a little bit, because there's a lot of interesting things happening, and I want to kind of revisit a topic that we just slightly touched. We talked about cruise ships and we talked about airplanes, but there's one sector that I'm really getting hot about right now, and we kind of wrote this sector off as well. Casinos. So just to give you a little feedback, I just did a report recommending MGM, ticker symbol MGM.
Okay.
And what I read, and this was just yesterday. It's a total coincidence that we're talking today, but I did the report yesterday. They are having a huge amount of money coming in from China, from the gamblers in China right now.
Really?
Yes, a huge amount. I don't remember the numbers. I don't want to tell you something that's just not true. But when I was reading it yesterday, I was like, wow. And it was a big surprise. They're seeing a lot from the US, but they're seeing a lot of gamblers, and their numbers are just amazing. So the stock is doing really well. It's trending very, very nicely, but it looks like they are having a very strong turnaround. This earnings, I feel like this earnings quarter for them was a major catalyst, a major turnaround catalyst, which is why I featured them. But man, oh man, those Chinese, they're gambling like there's no tomorrow right now. What do you think about it?
People are coming back. Listen, the reopen trade, we touched on this last week, and it went bananas. And kudos to us for being there, saying this is the real time now. This is the real, like, you're going to see, we've been down yesterday. We're going to be down today too, in the beginning, at least, because of this hot CPI number. For those that don't know, we record this before the stock market opens. So I might sound like a wild jackass in 7 hours from now, but from the way it looks now, pre-market futures are bid down. NASDAQ's almost down 1%, but the reopen stocks, I anticipate to do better than the rest of the other sectors that aren't reopened. And if you look at where the misery is, the sheer misery, it's in the Pelotons, it's in these companies that were COVID only stocks. It's in their earnings too. Like if you look at what Peloton reported, they got smoked. And what you're finding in the case like with MGM who reported is that, they have deeply suppressed expectations, but they're shocked by how explosive.
It's the complete it's like you said, it's a complete opposite of what we're seeing with
poker. I was in a casino most recently for the first time in years. I was at the Hard Rock here playing poker. I'm a poker player also. It's the same mathematical thing, risk reward, whatever. So I was there and it was a 2-hour waiting list, Roger, to get a seat. And like at a pretty decent level table, you have to sit down with a couple of grand. And it was a 2-hour waiting list of people that have a couple of grand to play poker with. And I'm like, what's going on here? And it's the same thing. Everyone is feeling safer. Dade County had like less than 1% cases. I'm double vaccinated. So I was like, let me go play some poker.
Right.
And everyone is starting to have these same feelings of like, okay, I wouldn't do this. I would have done that. Like we're working our way up the totem pole of activities that are worthwhile risks. And I've been going to restaurants since almost the beginning. I'm going to hotels. I've been living life at events at church. But
I went to
casinos a bridge too far, right?
I went to a concert. I went to a rock. I saw Pat Benatar.
That's awesome. You're aging yourself, my friend.
And I'm going to go see ZZ Top this Sunday too. How about that?
Aging yourself again, but I think those will be safe. But the point that I'm making is we're all clamoring for experiential life living, like not stuff. I don't want another workout machine in my house.
Right.
I want to go somewhere and do something.
Jeff, people were sitting at this. It was an outdoor concert. People were smelling the air like they haven't been outside in 2 years.
And I think that I honestly think that this new Pfizer drug is the silver bullet. I do think it's the silver bullet.
And Merck too. Merck also coming out.
Merck is coming out with one, but Pfizer's is so good. Pfizer's is 90% keeping people out of the hospital, and of the sample size of about 1,100 people that took it, 0 died, and they all had COVID. 0 died, and they were all high risk people. 0 died, and they were 90% efficacy at keeping these people out of the hospital compared to what a normal experience.
So I do believe we are, and you and I have been very cautious about this, and I think this is the first time in the last 2 years that we're talking this way. So I do want to remind people that, and I agree with you 100%. I'm seeing it. I'm seeing all the
low-hanging fruit, man. People,
the writing is on the wall.
Think about it. Like the reopened stocks, they had like a fake move up and then they had another big swoop down. And now they're moving back up. But this is the real move. This is the real move because it's coupled with the real reopening of the economy, so to speak, rather than the stutter and start that I think we had.
Let me ask you a couple of tough questions. This morning, when I looked at the CPC, the put to call ratio, it was at 61.
Wow.
Its lowest level since December of last year.
Yeah.
And obviously, so if you remember last week when we talked, I explained to you, I explained my theory that I thought that a lot of the tech stocks that have ran up, we're going to see market capitalization go back into high dividend yielding stocks and smaller stocks because higher rates are not good. Right now, the 10-day RSI on the SOX index and the QQQ, semiconductor index, SMH, SOX, and QQQ. Those are for those who don't know, those are the semiconductor index ticker symbols, SMH and SOX, and QQQ is the Nasdaq 100. They've been going parabolically the last several days, and their 10-day RSI is just probably the highest level, if I had to guess, it's been also in a year. So when you're looking at that and you're looking at the put to call ratio, and also this morning when I looked at the market, the Dow Jones was like a third less down than the QQQ. I think we're going to see some selling pressure.
I think tech is going to be the center of selling. I think that this inflation number was really, we've been talking about this story a lot. This inflation is real, whether they want to admit it or not. And my base case is the Fed is going to be forced to capitulate at the worst time, because rather than doing the right thing, it's like you tell your kids, do the right thing early if you made a mistake, and then the mistake is minimized. But if you wait, you cover it up, you pretend like it's not there, it just grows and it just grows and it just grows. So Fed's going to have to capitulate. They're going to have to stop buying. They're going to have to taper faster than they wanted to, and they're going to have to raise rates earlier than they wanted to and more aggressively is my base case. And that's going to smash growth for a little while. in the long run, it's going to be a tremendous opportunity to scoop good investments for like 5 years out. But I think the center of pain is going to be there. But I think other parts, it won't be a total washout for the stock market because, as you said, a lot of great companies that are trading, offering really high dividends at reasonable PEs,
and earnings were great,
they're going to stay solid.
And earnings were fantastic.
Earnings are solid. But like super high multiple companies, they can take 20%ers overnight. And that's the thing. There's a lot of air. There's a lot of froth in a lot of growth companies. And that's where you need to be a little bit cautious.
And I personally think, and this is a personal opinion, I personally think that the shortages in the chips have been pretty much priced into the semiconductors.
They all beat. Of all the companies that had a great excuse not to make money, the semis were the number one. And they all smoked it. I mean, the good companies, not Intel, but like AMD destroyed their number. Yeah. NVIDIA destroyed their number. And so, Qualcomm also destroyed their number. And so the good companies with the wind at their back, they've navigated this really well. Just kind of like Tesla navigated the shortage compared to other car companies really well. The good companies do the right things. They execute well. Their leadership guides them through. They do better, right? And so I don't know if you saw this, but AMD signed so Facebook changed their name to Meta, right? So part of this whole strategy, it's not just a name change, it's a philosophical change with what the business is going to be. They're going to try to be like the big winner in creating the metaverse for everybody. What does that mean? That means that they're going to have huge like electronic server facilities, et cetera, to host that cloud meta experience.
Oh yeah.
And so they signed the contract with AMD exclusively to provide those chips for that. And that's why AMD had that extra leg up.
Yeah. And you and I have been talking about fading Intel and buying AMD for over a year now.
It's one of my monthly money flow stocks again this month, AMD. So when I see like these good names and I see the flows there and I see that there's like this amazing institutional accumulation, I'm
personally fading, instead of fading strength, which I don't like to do. I'm fading the downtrend. Well, the recent short-term uptrend in Micron. It's been in a downtrend for about 6-7 months. So I'm using this rally as an opportunity to sell it. What I see a lot of guys do, and I kind of want to bring this up with you, and this is a big, big error. You see a market running up or you see a stock running up, and somebody will ask me, Roger, do you think it's going to go higher? And I'm like, no, I don't. I think it's just going to kind of, and they're like, all right, let's sell it. No. And I want people to understand that's a very, very, very wrong reaction. You want to fade the weakest stocks going down, not the strongest stocks. You want to buy the strongest stocks on a dip, and you want to fade the weakest stocks on a rally.
I think that's right.
I want people to understand
unless
that
there's a regime change or something.
Right. Unless there's unless there's a major sector change, because what you're doing is because the people who bought 3, 4, 5, 6, 7 days ago are still going to hold on to their position, whereas the short-term traders in the short stock, they're going to continue unloading that position. But it's an error, and I don't want people making that mistake. So right now there may be opportunities to short some stocks, folks. If you do that, try to find the weakness, not the strength. Short the weakness and buy the strength.
That's right.
Something I wanted people to understand, and I know you feel the same way, because it's a very natural feeling. Oh, it's going to go down. Let's sell it. No. Don't sell that.
The first thing I want people to understand with what we're saying is, so you take this information and there's different levels of enthusiasm about a belief or a probability of something happening, right? So if I think something's overbought, that doesn't make it a short. That means I wouldn't buy more of it at this point. I might consider selling some of it. If I think something's like never going to see that price again, then you can ship your whole position out. But you can't short it yet still either, because you have to see it stop going up or you could get your face ripped off. And so there are different levels of what to do and how to do it with that same information. I think that's what not a different way, but like extra way of adding on to what you core are just trying to teach people, which is important.
Yeah, and the reason and usually I don't get into education too much on this broadcast with us, because we talk about relevant things in the market, but it's been something that people have been, because right now a lot of people are looking to short, and I want people out there to know that, hey, there's the right way and the wrong way, and there's a safer way, and there's a very high risk. And if you guys remember, if you fade AMD or a stock that's moving higher, and you're selling it just because it's moving higher and you think it's overdone, that's like standing in front of a freight train.
Right.
You don't want to do that.
That's not a short.
No, that's not a short. That's a very, that's like jumping out of the window and hoping
Intel on strength, Micron on strength, those are shorts. NVIDIA is not a short.
Exactly. Yeah. That's a good example. Intel, definitely.
The momentum is just too strong in those
Right.
names.
Exactly.
Tesla's not a short. I'm not always bullish on it, but it's never a short. It's really never a short. In a way.
No, because those estimates just keep going higher and higher. The carrot keeps getting bigger and bigger and bigger.
And there's a buyer. There's a natural community of bulls that are going to take it higher on pullback. So if you short it too early, you're going to get your face ripped off. If you short it in the hole, which is like selling it like now, like it sold off double digits yesterday, you get your face ripped off. Like under no circumstances do you have like edge where you're like 75% probability going to make money on the short. So that's not a short. It doesn't necessarily mean you have to buy it. It just means you can't short it.
Right. Right. What I tell people usually is before you sell a stock, make sure that at some point recently it made a 90-day low, at least a 90-day low, a 3-month low. If it hasn't,
shorting's tough, man. It's a different animal. It's a different beast. You can't invest on the short side like you can on the long side. You have to be quick with it. You have to be. That's why like the momentum shorts, like we're talking about, like shorting a wounded animal. It's a quick hit, and you don't stick around either because there could be a restructuring, there could be a buyout. There's all kinds of things. The world is based on things going higher and opportunities taking things back higher. So you can't ever be complacent or relaxed on the short side, which is a major difference. With longs, you can be a little bit more patient. You can be a little bit more, you can have a much more long-term view. Shorting is a different game. And I always say it's a do not try this at home unless you're like, I say kids, don't try this at home with the shorts. A lot of people try to become short traders first. And it's like, don't try that at home. Learn from a pro how to short because it's a different beast.
Very true.
As a hedge, as a short-term swing trading strategy, yes. But to invest from the short side, that's impossible.
It's a good way. That I couldn't have said it better myself. Jeff, before we conclude, any words of wisdom moving forward? Any sectors you like? Any pairs you like? Anything that you want the world to look at right now?
I'm still on this reopen thing. I mean, there was this so one of my stocks that's been parabolic has been Live Nation. That's one of my monthly money flow elite stocks. And I still love this stock. They had like this tragedy that happened. I don't know if you saw that. It was like that concert.
I did. I've been hearing all it's been all over the news. Yeah.
Rest in peace, those poor souls, honestly. And I don't mean to make light of the situation, but that's an opportunity. That's if you're an investor, if you're looking to get in to leg into this position, the momentum in Live Nation is, like you said, in concerts and casinos, it's there, it's real. And, it's going to continue. It's going to continue.
So you're very big on the reopening right now.
I don't, I think that Pfizer thinks a silver bullet. I think COVID is low everywhere it should be. I think the vax works for the most part. I think the hospitals are not overburdened. I think even
Sleepy Joe Biden said we are at a turning point for the first time.
There's going to be we said this I said this, you and I had this conversation a year and a half ago. I said, there's going to be 10 to 15% of the population that are never going to get over COVID.
Right.
And there's 10 or 15% that thought it was a total hoax.
Right.
And those people should be ignored both sides because they're not going to be the ones to listen to do things appropriately. And they're not going to be the ones to listen to when things are okay. So if you discontinue that and you look at just like what the remaining 70% of the population is doing, the remaining 70% of the population is traveling again. They're going to concerts. Yeah. They're sending their kids to college.
Ford just made it mandatory for all of their employees just less than a week ago to get vaccinated, which is pretty big, and it's happening everywhere. But I agree with you. I feel very confident that we are on our last leg, and like you said, it's always going to be around, but it's not going to be like what it was the last 2 years. It's going to be a very different animal.
You can find things to be scared of all the time. You really can. But you have to have a statistical understanding, like swimming in the ocean, getting my children over the fear of getting eaten alive by a great white shark that barely swim in South Florida waters, right? Statistical probability of it is incredibly low. So you have to go over these things. Statistical probability of dying in a commercial airline flight, incredibly low. And so if you have any rational fear, that's on you at a certain point. So you have to know what's rational, what's irrational. And I do that through understanding math. And I want the people that listen to me to do the same thing.
Yeah, we always base everything on the most objectable standard possible, and if you do that, you will always have a very clear balance between what's working and what's not, and you won't be jaded in any direction, which takes a long time and many, many years to master. Which
I think you got to still keep. I think the last thing I would say is keep an eye on the 10-year. Let's see what it does. It may surprise week move lower, but I think it's gonna take it all back within the next week or two, and we'll see what it does to tech.
Yeah, I sold the 10-year yesterday at 150 or 151 around there. I think it's a little overdone, but it may still come up a little bit because the stock market is a little bit wonky right now, for sure.
Yeah,
so I agree. But overall the trend is going to go back down because bonds, interest rates are going to go higher. Jeff, this was a wonderful session. We talked about like 8 different topics today, man. We covered a lot of ground.
And I feel like I forgot to say something, but I will talk to you next week and I'll remember.
Yeah. Well, was it something about China? We kind of talked about China a little bit.
China's kind of, I don't know. If it becomes something, I'll start paying attention. It's kind of been quiet, except for the fact that they're building like exact carbon copies of U.S. Aircraft carriers and practicing bombing them in the desert. But
yeah, and from what I understand, their technology is like something to behold of. Yeah, yeah. So it's something. Yeah, we are not number one in stealth fighters right now. We're actually number 3.
We are. We have certain superiorities.
I'm sure. Plus, remember, we have tons of stuff that we don't know about. That's
we have certain superiorities. I'll leave it at that. But
I'm sure we do.
Just looking at their activity, it seems aggressive. It seems a bit aggressive.
Yeah, agreed.
They're not trying to hide it, right?
No, they're not. They're not.
PR.
Right. Well, Jeff, this was a wonderful session. And folks at home, if you want to reach out to Jeff, please feel free to do so. It's jeff@joyofthetrade.com. His email is jeff@joyofthetrade.com. My email is support@marketgeeks.com. If you want to check out more of what Jeff has, and Jeff has some amazing programs. They have very high profit factor, they have a very good win rate, and they actually work and make sense on a normal level. You guys will love them. Check them out. Either visit joyofthetrade.com or Wealth Press. Jeff, this was a wonderful session. You have a wonderful remainder of the week. I'll touch base with you later, and I will see you here next week on our midweek roundtable. Bye, everyone.
Thank you, Roger. Have a great week, guys.